Here's a number that should make your blood boil. If you live in Houston, you're paying an average of $3,647 per year for car insurance. That's 13% more than the Texas average, and a staggering 47% more than you need to pay if you know what you're doing. I'm talking about real money here. Over a 5-year period, that's potentially $8,000 to $10,000 in unnecessary premiums. Money that could be sitting in your investment account instead of padding an insurance company's quarterly earnings. Today, I'm going to show you exactly why Houston's insurance market is broken, which zip codes are costing you the most, and the specific strategies that agents don't want you to know because they make less commission when you use them. Let's get into it. First, let's understand why Houston is such an outlier. According to 2025 data from NerdWallet and Bankrate, full coverage car insurance in Houston averages $3,647 per year, compared to $3,220 for Texas overall and $2,513 nationally. But here's what's really interesting. The cheapest zip codes in Houston see rates around $2,100 per year. The most expensive? We're talking $3,800 to $4,200 annually for the exact same driver profile. Same person, same car, same driving record, just a different address. So what's driving this massive disparity? Factor 1, the uninsured driver crisis. Texas has one of the highest uninsured motorist rates in the country, nearly 14% according to the Insurance Research Council. But in certain Houston neighborhoods, that number climbs to 20% or higher. When uninsured drivers cause accidents, guess who pays? You do, through higher premiums for uninsured motorist coverage, which essentially subsidizes the bad actors. Factor 2, vehicle theft. Houston leads Texas in vehicle thefts. In November 2025 alone, the Texas Motor Vehicle Crime Prevention Authority ranked Houston number 1, followed by Dallas, San Antonio, Austin, and Fort Worth. Now there's some good news here. Vehicle thefts actually dropped 20% between 2023 and 2024, down from 19,000 incidents to about 15,345. But we're still talking about one car stolen for roughly every 23 residents in some neighborhoods. Pickup trucks dominate the theft statistics, representing 4 of the 6 most stolen models statewide. So if you're driving a late model F-150 or a Chevy Silverado in Houston, you're paying a premium. Factor 3, weather events. Houston is one of the top 3 metropolitan areas at highest risk for storms and hurricanes, according to the Insurance Information Institute. Texas had more hurricanes than any other state in 2024. Every hurricane, every flood, every hailstorm translates to comprehensive claims, and those claims get spread across everyone's premiums. Factor 4, speed limits and accident severity. Texas has the highest speed limits in the country, 85 miles per hour on some highways, compared to the national average of 70. Faster speeds mean more severe accidents, higher medical bills, and bigger payouts. Factor 5, the litigation environment. Texas is a fault state with a highly litigious environment. When accidents happen, lawsuits follow, and insurance companies price that risk into every policy. Now here's where it gets tactical. Your zip code is one of the most powerful factors determining your premium, and insurance companies have dramatically different risk profiles for different neighborhoods. Let me give you specific examples from 2025 data. Zip code 77071, that's the Westwood area, Southwest Houston. Residents there are paying an average of $259 per month for full coverage. That's over $3,100 annually. Meanwhile, drivers in the suburbs, places like Katy, Sugarland, the Woodlands, are seeing rates 30% to 40% lower for identical coverage. Why? It comes down to claims data. More accidents, more thefts, more uninsured drivers equals higher premiums for everyone in that zip code. The most expensive Houston zip codes, 77071, Westwood/Alief area, 77033, South Park, 77051, Sunnyside, 77061, Gulfgate. The most affordable Houston zip codes, 77059, Clear Lake, 77094, Energy Corridor, 77077, Memorial, 77079, Memorial/West Chase border. Now, I'm not suggesting you move to save on car insurance, but if you're already considering a relocation within the Houston metro area, Factor insurance costs into your decision. We're talking about a potential $1,200 to $1,800 annual difference. That's real money. Here's the strategy that can save you hundreds to thousands of dollars, and it takes about 45 minutes once a year. According to every insurance expert I've consulted, the #1 factor determining what you pay is which company you choose. Not your driving record, the company. Let me show you what I mean. For the same 35-year-old Houston driver with good credit and a clean record, here's what different companies were quoting in late 2025. At the high end, we're seeing companies charge $3,000 to $3,500 for the exact same coverage. That's a $2,000 spread for identical protection. Here's your action plan. Step 1, gather your current declarations page. This shows your coverage limits, deductibles, and current premium. Step 2, get quotes from at least 5 companies, including at least 2 regional insurers like Texas Farm Bureau and 1 direct writer like GEICO. Step 3, make sure you're comparing apples to apples, same coverage limits, same deductibles, same additional coverages. Step 4, ask about every discount. We'll cover those next. Step 5, review your policy annually. The cheapest company this year may not be the cheapest next year. Now let's talk about optimizing your actual coverage, because many Houston drivers are either overinsured or dangerously underinsured. Texas requires minimum coverage of 30/60/25. That's $30,000 per person for bodily injury, $60,000 per accident total, and $25,000 for property damage. But here's the reality check. Those minimums are woefully inadequate for anyone with significant assets to protect. Consider this scenario. You're at fault in an accident involving 2 people who each require surgery. Medical bills hit $150,000. Your minimum policy covers $60,000. You're personally liable for $90,000, payable from your savings, investments, or wages. Financial experts recommend carrying at least $100,000 per person and $300,000 per accident, commonly expressed as 100 over 300. But here's the strategic play for high net worth individuals. Your liability coverage should at minimum equal your net worth. And if your net worth exceeds $500,000, you should seriously consider an umbrella policy, which we'll cover in a future video. Deductible strategy, raising your comprehensive and collision deductibles from $500 to $1,000 typically reduces premiums by 10% to 15%, saving you $100 to $200 annually. But only do this if you have the financial cushion to absorb a $1,000 hit without stress. For most viewers of this channel, that shouldn't be a problem. Coverage you might not need. If your car's market value is less than 10 times your annual comprehensive and collision premium, consider dropping those coverages and banking the savings. Check Kelley Blue Book for your vehicle's current value. Finally, let me give you the annual insurance audit checklist that every Houston driver should complete. Every January, do this. 1. Review your declarations page. Understand exactly what you're paying for. 2. Get fresh quotes from at least 5 insurers, even if you're happy with your current company. 3. Verify all discounts are being applied. Companies sometimes fail to auto-renew discounts. 4. Reassess your coverage needs. Did you pay off your car? Buy a new vehicle? Add a teen driver? 5. Check your credit. Texas insurers use credit-based insurance scores. Improving your credit can meaningfully reduce your premium. 6. Consider a defensive driving course if yours is expiring. This annual process takes about 2 hours and saves the average Houston driver $400 to $1,200 per year. Let's bring it all together. Houston car insurance is expensive for legitimate reasons. High theft rates, severe weather, uninsured drivers, and litigation risk. You can't change those factors, but you can control which company you choose, which discounts you claim, and how you structure your coverage. The difference between a passive insurance buyer and an informed one in Houston is easily $1,000 to $2,000 per year. Over a decade, that's $10,000 to $20,000? Invested at 8% returns? We're approaching $30,000. That's the cost of not paying attention. If you found this valuable, subscribe for more strategies on protecting and growing your wealth. See you.